How's everyone doing? All right, so this is a new style of video that I want to start putting out for you guys. It's more or less an end of day report kind of thing, not so much in regards to what we can expect for the next day, which is usually how we do end of day reports. But if there was anything that occurred during the day, which I feel like a lot of people may have got stumped on or may have caught their, may have cut their hands on, got chopped up with, I want to dissect it and explain to you how you could have performed better on the day if there was a good trade that you could have taken and you missed it. I'll explain why we wanted to get involved, all these things. So for most likely every day of the week, I'm going to come on here and give you a full breakdown as to what I personally did and what you could have done on this day, and just a full breakdown on what we saw get printed on the day. So going into today, right, it's Wednesday the 18th of Feb. If we go onto our higher time frames, so on our macro chart, you can see that we were anticipating price to bottom out somewhere in here, right? You see we have this bullish array which is being respected, that 50% is being held, and we have this higher range, right, this larger range where we're transacting around the 50% of that range. So we wanted to see this hold, especially after this previous day candle closure on the 17th of Feb, this injection wick, right? We wanted to see confirmation that that was actually an injection and see follow through up to this buy side liquidity. So going on to our middleman time frames. So let's just drop over here. All right, going on to our H1s, onto our H1. Right, you can see that as the day opened, we got this protraction against the day, right? Ideally, you want to be looking for longs today. This was the main theme. Why? Because we tapped into that higher time frame array, which I just pointed out to you, and we got bullish follow through to the upside, right? Structure on the H1 had been taken out. So if I highlight that shift for you, let's just go over here, pop that up. Right, so this was the most recent high, or the last high that made this low, right, which got taken out. So this became sell side liquidity. This was our buy side trigger, right? This was the high that made this low. We pull up and we flip that, and then we start leaving behind arrays. So if this wants to work, you see we get this bullish imbalance, right? We get this BPR, as such, right? But you see we induced that, so this wasn't too significant. And then we have this order block, which we're trading within now, right? So this becomes a bullish OB. Nice. Let's just make this a bit bigger. Right, and now we're trading within this area of volume, right? This OB, which we're pushing through. Really, you see we get the MT of this, right? If we do this MT, you see we've closed below the mean threshold of this order block, so it's most likely we're going to see price trade towards these lows. So today we're just off the charts, but at London Open, right, so we're currently in New York timing, right below here, so we're 5 hours behind London, right? I'm in London, 5 hours behind London. So New York midnight opens, right? Let's go onto our lower time frames and understand what it is we were trying to play. So New York midnight right here, we open up, we're very liquid, right? We see that price is more or less just consolidating within this region here, and then we begin to expand lower. As soon as we see this aggressive move lower, which leaves behind these imbalances, we're straight away thinking, okay, cool, we're tapping into these higher time frame arrays. If I just bring that down, especially this one, into that lower time frame, so visibility, we want to bring that to M15, right? We're tapping into this array, and we are in the discounted end of this whole range, right? This newly formed range. Let's get rid of that. Let's get rid of that. Add that. Right, you see that this is our discounted array. So we see price tap into that and we're saying, okay, cool. Now we want to see some kind of long kick in, right? The only problem is that price pushes lower. We stall here, right? We leave some kind of high and we push down. We're looking for longs, but we're trying to go long into opposing arrays. If this was very liquid, if this remained liquid, and there wasn't any open pockets as price tapped into this bullish array, then we would have had more confidence to go long. However, you see here that we're trying to go long into opposing arrays, and you don't actually get a clear M15 shift. So I saw some people try enter here, right? But what you're realizing is that this is your shift on M15. We don't get body close above, right? So you see we failed to body close above, but even if we did, you have this in the way, right? Which isn't ideal. These are your lower probability setups that you're looking at. Even though we tap into this array, M15 bearish intent is in control. And you see that price taps into that and begins to push away, right? So we push down, we tap into this array, no array gets left on the way up, right? So there's no intent being displayed that we've taken out by sell side liquidity, we've tapped into this array, right? But we're not getting any intent to push price higher, which tells you that buyers are not stepping in aggressively. Buyers aren't stepping in. So why are you stepping in, right? So in this leg here, no bullish arrays, nothing to enter on, right? We come down here, we don't sweep this, and we don't take this out on DXY either, right? So we create these relatively equal lows on EU, and then we push up again and again, no arrays. So even though this time we take out the shift area, right, and we close above, notice how we're tapping into an opposing array, but not leaving any arrays in our direction. I hope this makes sense, right? You're trying to trade bullish intent, but there is none being formed, and you're being greeted, or you're trading into an opposing array which currently is holding, right? So you don't want to be trading into this. The best ideal condition is where this is closed off and you're getting bullish arrays being created to the upside, right? So London, so between 2 a.m., New York, and 5. So if I just change this for all the guys in London, right, you see that is 7 a.m. to 10, right? Between those two times where we expect this London protraction, notice there was no protraction. There wasn't an aggressive, low being put in. This wasn't aggressively punched in. So this one, this initial push down doesn't punch in an aggressive low, right? We stall. We go down again. This doesn't punch in an aggressive low. We don't shift. We come in again. This isn't an aggressive low. It doesn't get isolated. It's not away from other lows, right? And then we tap into this array and we leave no arrays. So this isn't a protraction. A protraction isn't just a move against the day. You have to pay attention to how it moves against the day. It has to be sharp. It has to grab liquidity and inject liquidity. And that wasn't happening here, right? And then we get this again. And then some people try to play this imbalance to try and go higher. But you have to understand, we've just taken out this liquidity, right? You're trying to trade this higher, right? But we've just taken out buy side liquidity, and we have these weak lows over here, right? This was not injecting liquidity. This was some kind of retracement to the upside to grab buy side liquidity to push lower. You can see that we didn't leave any kind of isolated low to the downside. We just built up low resistance lows, which we then slammed into after taking this, right, for New York. The only real play here would have been some kind of shift play with your stops above here. You could have gone short from here, trying to trade that into here. But this is against your plan for the day. If our plan for the day was to trade long, right, and we don't get that, you just leave it. That's it. By trying to sit here and catch some kind of reverse play, you're putting yourself into unplanned territory. You didn't plan for this, and that's where everything goes wrong. You want to trade the scenario you planned for, and we dived into all of these concepts, right? And the main thing you want to take away here is when we're grabbing liquidity, right? So we get this sell side liquidity here, we body close below. We need to wait for a body close on the opposite end, a shift. We don't get that, right? We don't grab liquidity from here. You see that the low is 18286, This is 18286. So no, it's not 18286, is it? 18286, okay. And what's this one? Okay, so it's equal lows. So we don't grab liquidity from here, right? So that creates relatively equal lows. And then we close above, tapping into this array and respect it without creating any bullish imbalances or intent, right? So this whole area here was a no-go zone. You don't want to get your hands caught in this. That's why we didn't trade that, right? Looking at the H1, the final piece of this puzzle, right? When you look at this, this is your bearish imbalance. When the H1, right, so we were looking at those potential longs of that imbalance, right, where I said you wouldn't want to get involved, this here. The reason you don't go long here is because, look, your H1 here, so this is your H1 close, right? So you might have been looking at here saying, cool, I want to get involved here. You wait for the H1 to close. That closes below your H1 bearish imbalance, which is here. So you're holding this. Right, price is respecting this bearish imbalance. You're on the M15 trying to trade long, right? But you're being capped by this higher time frame bearish imbalance, which holds more weight, right? So this is all the technicalities of order flow. This is what you need to be paying attention to. So when price closes below here, you should immediately say, cool, I can't get involved in this until this gets induced, because we've tapped in once and we respect. We tapped in twice, respect, 3, 4, right? And you just see, we grab liquidity, we inject, bang, and we drop. So that was the play for the day. And you can see how this lower end of this chart becomes low resistance. We've got all these lows piled up together, right? Whereas this is what an isolated level looks like, where we run liquidity, we isolate this high and move away from it with speed and intent, taking out significant levels. That did not happen from this low to this high. So I hope you guys enjoyed that, and I will see you tomorrow for the next one.